build sustainable wealth, strategies beyond quick profits. Have you ever felt like, if you don't jump in now, you'll miss your once-in-a-lifetime shot? Have you ever taken profits too early, only to watch that same stock double just weeks later? You're not alone. But this is the deadliest trap the market sets, the get-rich-quick mindset. Here's the truth. The wealthy don't get rich by chasing opportunities. They get rich by following a strategy. And if you truly want to build lasting wealth, you must break free from the race of impatience. Today, we'll uncover what most people ignore, but every successful person knows. It's not the next big opportunity that makes you rich. It's having the right strategy. Part 1. Average people see money as a chase. Average people don't think of money as a system. They see it as prey and themselves as the hunter. From a young age, we're programmed to believe, work hard and you'll get rich. But as we grow up, we realize, hard work alone doesn't build wealth. So people start running, chasing opportunities, chasing trends, chasing the crowd. And tragically, most people spend their lives chasing money, instead of learning how to make money chase them. 1. The fear of missing out by one step. You've heard it before. If only I bought Bitcoin in 2012, I wouldn't be sitting here right now. That's the common thread in how average minds view money. FOMO, the fear of missing out. They believe wealth comes from catching the moment, not building a system. They live in regret over the past and anxiety in the present, haunted by the thought they're falling behind. And from that moment, they stop investing and start gambling. 2. Rushing to take profits out of fear. There's a strange paradox. New investors are patient with losses, but terrified of holding profits. Example, a stock rises 15%. They fear a correction, so they sell. But the stock continues to rise 80% more. Result? They lock in small gains and miss the big wave. Meanwhile, the wealthy? They don't sell because the price goes up. They sell when their strategy no longer holds. They don't let emotions control their trades. Average people? They have no strategy, only feelings. 3. Every market move triggers an overreaction. Average people move with the heartbeat of the market. When it goes up, they feel left behind. When it drops, they panic and run. A 5% dip feels like the end of the world. A 10% rise makes them believe it's only going higher. And so they react emotionally, not logically. But wise investors understand. Markets rise and fall. It's part of the game. And instead of reacting to every fluctuation, they only care about one thing. Is my strategy still right? 4. They don't know the difference between having money and building wealth. One of the biggest financial traps. Thinking fast money equals lasting wealth. Truth is, anyone can make $10,000, $20,000 from a single trade and lose it all just months later. Because they don't think in assets, they think in cash. They see what's in the wallet, but don't understand what that money could become. If used correctly, the rich think differently. They may lose in the short term, but their assets grow over time, because they measure wealth not by income, but by net worth and stable cash flow. 5. Eventually, they burn out on their own race. By treating money as a goal, not a tool, average people create a cycle that wears them down. Work more, feed more, worry more, still not rich. They think, just a little more effort and I'll make it. But that finish line? It doesn't exist. Because the problem isn't speed. It's direction. You can run fast. But if you're running in circles, you'll always end up right back where you started. Conclusion: stop chasing money. Make money work for you. When you see money as prey, you'll always be hunting, competing, and exhausted. But when you start seeing money as a tool, like water that can be guided, controlled, and reinvested, you begin to build true, sustainable wealth. Stop asking, how can I get rich fast? Start asking, what strategy will make me rich forever? Part 2. The rich think in cash flow, not quick gains. The average person asks, what should I invest in to make fast profits? The rich ask, which asset can generate steady cash flow for the next 10 years? The question you ask shapes your entire financial future. Because real wealth doesn't come from winning one deal. It comes from owning a system of assets that produce consistent income. Quick gains might make you happy for a few days. But cash flow is what lets you sleep well every night. 1. The rich don't need to guess right. They just need steady income. Have you noticed? The rich rarely brag about how much they made on a single investment. Instead, they talk about cash flow, compound interest, and opportunity cost. Because big wins are random. Steady income is strategic. Someone might double their money on stock A in 3 months. Sounds great. But if the market turns, they could lose everything in a week. Meanwhile, someone else invests in an asset that pays 5 to 8% annually. Whether the market goes up or down, money keeps flowing into their pocket. 2. Cash flow protects them from making stupid decisions. Why do many people panic sell during a crash? Because they lack cash flow. They need money to live, to pay debt, to cover expenses, so they're forced to sell. But the rich, with income from rental properties, dividends, or automated businesses, don't act out of fear. Market drops? They're fine. Asset value falls? No worries, income still comes in. Cash flow is their emotional armor. 3. The rich don't invest to buy low, sell high. Here's a core difference. The average investor thinks, buy the dip, sell the top. The rich think, buy assets, collect cash flow. If you're always trying to time the market, you're living by luck. The rich choose income-generating assets regardless of market hype. Properties still rent out. Businesses still sell products. Dividend stocks still pay. They don't speculate, they build income systems. 4. The rich don't chase hype. They seek intelligent cash flow. People often ask, should I invest in AI? Is crypto about to pump? Has the stock market bottomed yet? These are fast profit questions. But the rich ask, which model gives me stable, low risk, controllable cash flow? Sure, they may invest in AI, crypto, or stocks, but not to flip. They're building scalable income channels. They care less about price, more about cash flow and risk control. 5. Cash flow gives them freedom, not just a paycheck. You can't be truly free if your only income is from your job. Lose your job or want to quit. Your income stops. The rich learned early. Build money systems that don't rely on you. Real estate generates income. Stocks generate income. Businesses generate income. Even digital content can generate income. And with incoming cash flow, they get to choose. work or not, invest more or rest, take risks or walk away. Financial freedom isn't about how much you have, it's about how much keeps coming in when you do nothing. 6. The rich are patient because time is cash flow's best friend. Chasing fast gains kills your patience. But building cash flow makes you steady because time favors cash flow. A rental asset held for 10 years may triple your returns compared to selling now. A growth stock held for 15 years may 10x your capital. Average investors find sideways markets boring. The rich use them to accumulate and build cash flow. Conclusion: the rich build systems, not lucky strikes. Real wealth doesn't come from one big win. It comes from owning a system of assets that generate reliable, growing income unaffected by emotions. Fast profits are temporary, cash flow is forever. The rich build reservoirs, not bucket-by-bucket gains. Part 3. Strategy is your weapon, not your emotions. There's a hard truth few dare to face. Most financial decisions in your life are not made with strategy, but with emotion. You buy out of FOMO. You sell out of panic. You invest because others profit. You exit because you're afraid of being judged. Emotions control you, and you think you're in charge. The wealthy play differently. They let strategy take the wheel. Emotions are just passengers, never the driver. 1. What is a financial strategy? It's your map in the storm. Imagine driving in thick fog with only 5 meters of visibility. Without a GPS, you'd panic, get lost, or turn back halfway. The financial market is just like that. When prices rise, you get greedy. When prices drop, you get scared. Only a clear strategy keeps you from losing direction. Strategy means knowing when to enter and when to stay out. Understanding your goals, growth, safety, or cash flow. Setting your rules and sticking to them even when emotions scream. 2. The wealthy don't follow trends, they follow their plan. Average people ask, what's the next big trend? Should I jump into crypto? Is the market recovering yet? Because they have no strategy, only guesses. The wealthy follow a long-term plan. They don't need trends. If their portfolio calls for 20% growth stocks, 30% cash flow assets, 50% defensive real estate, they follow it. Not because the market says so, but because their strategy already shows the way. 3. Emotions lose you money. Strategy helps you build lasting wealth. When Bitcoin hit $60,000, millions jumped in because of emotions. The rush to get rich quick. The fear of missing out. Blind belief in the hype. What happened next? One sharp drop, most were wiped out. Strategic investors were different. They didn't go all in. They diversified. They knew their risk limits. And they prepared for the worst. The rich don't hope the market will favor them. They prepare to survive any market condition. For emotions are short-term, strategy is sustainable. You see a stock jump 30% in a week, and you rush in. A week later, it drops 15%. You panic and sell. This loop repeats, keeping you busy but going nowhere. Strategic investors don't do that. They define what assets match their goals, how long to hold, how to react in both best and worst case scenarios. Once the plan is set, they stick with it, no matter how the market moves. 5. The wealthy spend time on strategy, not guessing prices. Average investors stay up late watching charts, coin prices, breaking news. The wealthy spend time reading business reports, studying economic cycles, building risk management scenarios, reviewing portfolio performance quarterly. They don't gamble with their money. They operate like engineers, not casino players. 6. Discipline, the missing piece in every strategy. A financial strategy means nothing without discipline. Because emotions are powerful. They will tempt you to break the rules. When the market is green, you want to buy more. When it's red, you want to pull out. When you're up big, you want to double down. When you're down, you want to chase losses. Only iron discipline keeps you in the game. Discipline to not exceed your risk threshold. Discipline to ignore market noise. Discipline to know when to stand still. 7. Conclusion of Part 3. The wealthy win with strategy, not emotion. You don't have to be the smartest. You don't have to outsmart the market. But if you have a clear strategy and the discipline to follow it, you're already ahead of 90% of others. Finance is a long game, and strategy is the map that keeps you from getting lost. Remember, emotions push you to act foolishly. Strategy helps you survive and succeed. So, will you follow the crowd or follow your plan? Part 4. Owning assets, the true key to freedom. There's a harsh truth you need to hear. You will never be truly free if you only earn money, but don't own assets. Many people make tens of millions each month, hundreds of millions each quarter, yet they own no property, no stocks, no business, no cash flow when they stop working. They think they're rich, but in reality, they're just highly paid workers. 1. Cash is an illusion. Assets are real power. Remember this. Money is not an asset. Cash is just a medium of exchange. Left untouched, it loses value over time due to inflation. In contrast, assets create cash flow and grow in value, helping you fight time and risk. The wealthy always think, what asset can I turn this money into? Not, what can I spend this on to feel better? 2. Assets are things that work while you sleep. Assets don't need you to be present to function. They can be a rental property, a profitable stock portfolio, a self-operating YouTube channel, the book that generates passive income. The rich don't sell time. They own income-generating systems. Every asset they build is like an unpaid employee working 24/7. Meanwhile, the average person sells their time to others and calls it stability. 3. Assets buy back your lifetime. This is the most important point. Assets are not just about money, they're about freedom of choice. When you own assets, you don't work out of fear of bills. You don't need to please a boss or a market. You can choose what you love to do, not what you must do. The rich don't just seek money, they seek the power to say no. No to work they hate. No to dependence on others. No to trading life for a monthly paycheck. 4. The rich think in terms of asset baskets, not salary levels. The average person asks, how much do you make? The wealthy ask, what's your net worth? Because they know. Income is a stream. Assets are the reservoir. The bigger the reservoir, the freer you are. A high salary without savings still makes you a slave to payday. Instead of chasing income every month, the rich build a diversified asset basket. one part for long-term growth, one part for steady cash flow, one part for protection in tough markets. 5. The rich buy assets first, then spend later. Here's a simple rule. The rich spend from their assets, the poor spend from their income. The average person gets paid, buys phones, bikes, clothes. The rich gets paid, buys assets, assets generate income, spends from that income. That's why the rich get richer the more they spend, while the poor get poorer. Which cycle are you living in? 6. Not everything you buy is an asset. A car that generates no income is a liability. An oversized house bought with huge debt can also be a liability. An asset isn't defined by its price, but by its ability to generate value. The rich ask, does this produce cash flow? Does it grow in value over time? Does it make me more free? If the answer is no, they don't call it an asset. 7. Owning assets is a process, not magic. Nobody builds wealth overnight. The rich build assets bit by bit. Consistent saving, reinvesting returns, staying patient for years. Assets don't come from luck. They come from right thinking, disciplined action, and extreme patience. You can start from zero, but if you spend the next 5 to 10 years building real assets, your life will transform. 8. Conclusion of Part 4. True freedom comes not from high income, but from owning assets. You can live comfortably off income, but you only live freely when assets work for you. The rich don't work hard forever. They let assets work for them. You can do the same if you stop chasing liabilities and start building your own asset basket. The question is, are you living off your effort or your assets? Part 5. The owner's mindset, not a reactive one. Here's something you must understand. The rich don't react to circumstances, they create them. Most people live in a reactive state. Gas prices rise, they skip breakfast. Late paycheck, they panic. Red market, they panic sell. Bad luck, they blame fate. They live in fear, act out of anxiety, and decide based on emotions. But the rich? They act from a place of ownership, not because they have to, but because they choose to. Ownership is not power, it's intention. The rich don't work because they must. They work to build an asset, a system, a future. They operate with clear goals, concrete plans, relentless discipline. Meanwhile, average people live with a list of urgent tasks, a busy calendar, and a sense of always being pulled by life. Successful people don't live to put out fires, they live to build. 2. Ownership starts with asking the right questions. Reactive people ask, why is this happening to me? How do I escape this situation? Owners ask, what am I trying to create? What part of this can I control? What action moves me toward my goal? Different questions, different life. The rich don't let emotions decide their actions. They let their goals lead the way. 3. Prepare proactively, don't react fearfully. Instead of waiting for crises, the rich prepare early. Emergency funds, diversified portfolios, strategic skills and relationships, backup plans B, C, even D. They don't expect things to go smoothly, they're ready when things go wrong. Their power doesn't come from avoiding risk, it comes from standing strong despite it. 4. No blaming, no complaining, just action. Average people in tough times tend to blame the economy, blame their boss, blame bad luck, blame unsupportive family. But the rich understand, blame doesn't build wealth. Complaints don't grow accounts. Resentment doesn't create freedom. They don't ask, who did this to me? They ask, what can I do next to rise above this? Ownership doesn't need perfect conditions. It just needs a willing person. 5. Emotional control, especially in investing. In the market, reactive investors buy from FOMO, fear of missing out. Sell in panic. Trade emotionally, not logically. Follow a clear strategy. Make database decisions. Stay patient and wait for timing. Emotion is the #1 enemy of undisciplined investors. But the rich train their minds and turn emotion into an edge. 6. Ownership is not doing everything, it's mastering yourself. Owners don't need to control the world. They only need to control their mindset, their decisions, their discipline, their response to adversity. When you control yourself, you control your finances. When you control your finances, you control your life. Ownership is an inner game, and it starts within. 7. Ownership mindset is the foundation of lasting wealth. Assets can be lost. Markets can crash. Income can pause. But if you keep the mindset of ownership, you'll rebuild everything. You'll bounce back faster. And you'll never be a victim of circumstance. Wealth doesn't begin in your wallet, it begins in your thinking. And the ownership mindset is the first asset you must invest in. Conclusion to Part 5. The rich own their destiny. Others let destiny own them. Take a hard look at your life today. Are you living by design or just reacting to what shows up? Are you creating results or cleaning up consequences? Are you owning your future or hoping things will get better? If you want financial freedom, time freedom, and life freedom, you must start with mental freedom. Freedom from panic. Freedom from blame. Freedom from fear and herd mentality. Because true freedom is owning yourself. Part 6. Patience, the hidden weapon of the wealthy. There's a paradox in the world of wealth. Those who chase fast money often stay poor forever. Those who are willing to get rich slowly eventually become truly wealthy. And the difference? It's not knowledge. It's not luck. It's patience. 1. Patience, something everyone knows, but few truly practice. In the era of 2-hour delivery, 15-second videos, and traders cashing out in 3 minutes, we're trained to be impatient. If an investment doesn't profit immediately, we doubt the strategy. If a startup doesn't make money in 3 months, we quit. If someone else gets rich faster, we fall into FOMO. And so, we jump from one strategy to another, simply because we can't wait long enough for anything to grow. The wealthy do the opposite. They are patient with the process, not obsessed with quick results. 2. Patience doesn't mean doing nothing. There are 2 kinds of waiting. Average people wait without action, that's procrastination. Wealthy people wait while building, that's investing. They understand that all great outcomes take time to grow, like planting a tree. On day 1, you see nothing. By week 1, just a sprout. But by year 3, it becomes lasting shade. Patient investors know. Wealth building is like growing a tree, not spinning a lottery wheel. 3. The wealthy use patience to beat the market. Markets move in cycles, up, down, sideways, and chaos. The impatient will panic sell during drops, chase during hype, miss out because they don't wait long enough. The wealthy? They buy when others panic. They hold when others doubt. And they let the market do its job over time. They don't rush the market to make them rich. They let time grow their wealth. 4. The compound mindset, the patient investor's secret weapon. Albert Einstein once said, "Compound interest is the eighth wonder of the world. Those who understand it, earn it. Those who don't, pay it." The wealthy don't just invest money, they invest time to let compounding do the work. For example, invest $10,000 at 10% annual return. After 1 year, $11,000. After 5 years, $16,000. After 20 years, $67,000 plus. Not because they're smarter, but because they're patient enough to let time deliver results. 5. Patience with skills, not with excuses. The wealthy aren't just patient with assets, they're patient with personal growth. Learning a skill takes months or even years. Building real relationships takes time. Building a personal brand is a long game. While many quit after 30 days without results, the wealthy stick to the path for 3 to 5 years, and when they break through, it's explosive. 6. The patient know when not to act. Truth is, doing nothing is sometimes the smartest move. In investing, avoiding overtrading. In business, not expanding too soon. In life, not job hopping out of boredom. The wealthy understand. Waiting for the right moment beats acting at the wrong time. Patience gives them control, and that protects their gains. 7. Final thoughts. Patience isn't sexy, but it's how champions win. Nobody praises patience. There are no headlines saying, "Man holds stocks for 10 years and builds wealth." Instead, we hear, "Startup raises millions overnight." "Trader hits jackpot in 2 days." "Investor gets rich off a coin in 1 month." But here's the truth. The lasting success belongs to those who choose the slow, steady path. The ones who build with strategy, with foundations, and with time. That's why the wealthy build wealth with patience, not hype. Want to change your life? Train patience like a skill. Because wealth doesn't come overnight. But it will come if you stay the course. Part 7. Wealth is a lifestyle, not a moment. You can win the lottery. You can hit it big on an investment. You can suddenly become famous or make a lot of money. But that is not real wealth. That is just a moment of wealth, and many people, right after that moment, go back to where they started. Sometimes even worse. Because they haven't lived with a wealthy mindset. They haven't built a wealthy lifestyle. 1. Wealth doesn't come from how much money you have, but from how you live each day. Wealth is not the car you drive, not the house you live in, not your follower count, bank balance, or stock portfolio. True wealth is how you think about money, how you make financial decisions every day, and most importantly, how you act when no one is watching. Wealth is not an instant result. It is the outcome of quiet, repeated daily choices. 2. Wealthy people live simply, but not in lack. You'll find many millionaires living in modest homes, driving older cars, wearing simple clothes. But they are not poor. They choose not to spend just to impress. They live for financial freedom, not to prove anything. Because to truly wealthy people, money is not for show. It's a tool to create value, freedom, and positive impact. 3. The wealthy don't chase, they create. The average person reacts. Price goes up by. Crowd rushes into something, follow along. Someone flaunts success, feel the need to match. The wealthy do the opposite. They plan their own path. They have strategies and systems. They don't compare or chase, because they understand. If you live like the crowd, you'll get the crowd's results. To be different, you must live differently. For a wealthy life begins with small habits. Wealthy people don't just wake up rich. They build daily habits like someone who is already wealthy. Reading every morning. Managing spending clearly. Investing automatically every month. Tracking, reviewing, and improving constantly. Just like a healthy body comes from proper eating, exercise, and rest, true wealth comes from discipline, mindset, and smart financial behaviors. 5. They invest in themselves before investing in assets. You can lose money in the market. You can lose a job or an opportunity. But if you've invested in your mindset, knowledge, and life skills, you can always start again. That's why wealthy people always keep learning, always growing, because they know the greatest asset isn't in your wallet, it's in your mind. 6. Wealth doesn't come from a big break, but from a long journey. You don't need one day to change your entire life. You need to move in the right direction every day, even just one small step. The problem is, average people want breakthroughs. The wealthy choose evolution. Anyone can shout about building an empire, but the truly wealthy quietly lay one brick at a time. And one day, the world will think they made it overnight. But the truth is, they've lived like a success for years before that day came. 7. Conclusion: true wealth is an identity, not just a result. You don't become wealthy. You live like a wealthy person every day. Then wealth will come. Success will come. Freedom will come. But first, you must change within. Walk with direction. To invest instead of spend. Discipline over impulse. Strategy over luck. You don't need a bank full of zeros to live like the wealthy. You start today with every small decision you make. Because wealth is not a destination. Wealth is a way of life. And those who live it right will reach the destination. Are you ready to live like the wealthy? Comment below what you'll change starting today. And if you found this video valuable, hit like, subscribe, and share to spread the power of smart financial thinking.